You know how every few years another banking scandal explodes, right? Well, buckle up, because it's happening again. Lloyds Banking Group, one of the biggest names in British finance, just admitted the mess is far from over. We're talking about billions, lawsuits, and an entire industry about to face the music. This is the UK's car finance scandal, and it's spiraling fast. It's the kind of story that makes you wonder if the system is built to protect consumers or just protect the powerful. Here's what's going down. Lloyds has now warned investors that it might need to put aside even more money to deal with the growing number of claims from people who were sold car loans they couldn't afford or didn't understand. The scandal centers around something called motor finance mis-selling. Basically, millions of drivers were pushed into expensive car finance deals, and now, new evidence shows many of those deals were manipulated. Some lenders and dealerships apparently inflated interest rates just to earn bigger commissions, and customers had no idea. Lloyds originally thought this would be a manageable issue, but after today's update, that illusion is gone. Reuters says the total cost to the industry could hit £11 billion. That's right, £11 billion. And it's not just Lloyds. Barclays, Santander, and even smaller lenders are quietly bracing for the same tidal wave of claims. This is shaping up to be one of the biggest financial scandals since the PPI payout crisis, and that one nearly broke some banks. People are furious. You've got families paying double what their cars were worth, workers stuck in debt spirals because they trusted the dealership's finance expert, and now regulators are under massive pressure. Consumer groups are saying, how did this go unnoticed for years? It's another example of institutions that were supposed to protect people. Instead, they turned a blind eye until it blew up. And just like every time before, the big players deny responsibility until the lawsuits start rolling in. This isn't just about bad loans. It's about culture, a financial system that rewards deception, banks and brokers that treat customers as profit machines. Remember, we saw this with mortgage fraud, with PPI, with insurance, and now it's car finance. Every time it's the same cycle. They make billions during the boom, then plead innocence when it collapses, and the government steps in. Too little, too late. Because, let's be real, when was the last time anyone in a major UK bank actually went to jail? The Financial Conduct Authority is scrambling now. They've launched a full review into how these deals were approved. They're also considering new rules to stop commission-linked interest rates altogether, but critics say it's performative because the damage is already done. Tens of thousands of people are owed refunds, and the banks are already lawyering up. The next few months could define the credibility of UK regulators. Either they clean this up, or they confirm what many already believe, that the system is rigged. Lloyd says it's doing the right thing by cooperating. But let's not forget, they said the same during PPI, the same script, every time. Only this time, the bill could be even bigger, and if this scandal keeps spreading, it won't just be about money, it'll be about trust, and how much of it the British public still has left in their banks.